has ended for you on a very firm wicket. What are the growth rates that you anticipate for FY24 for the industry first and then for your company, Ashok Leyland?
I think, FY24 is also going to be a good year for CV industry. The CV industry itself will continue to grow. That is what we are expecting. The recent CRISIL reports say that the MHCV may grow by about 10 to 12%, the trucks, and the buses will even grow faster or higher at about 30%. So we think that overall the industry should grow at least 10% or more. And Ashok Leyland expects to continue to beat the industry growth, like in FY23.
By how much, sir? How much over the 10% industry growth will Leyland grow by?
See, in FY23, we grew better than the industry, right? So we had a sizable increase in our market share in FY23 on the MHCV side, right? I mean, we do hope on the back of our excellent products and also the network expansion that we have done in the last year, we will continue to grow better than the industry volume.
All right, Mr. Agarwal, so we got it in terms of the top line, but you've clocked in margins of over 11% in FY23. Do you have more levers in store?
Yeah, see, FY24, definitely we want to stay in the double-digit EBITDA levels. There are a lot of good things that are helping us to say that confidently. So one is that the market itself is going up. Ashok Leyland market share is going up. So we will achieve a lot of operating leverage because of those two things. Then there is a very focused effort on the cost savings because we think that within Ashok Leyland there is still a lot of scope for efficiency improvement. Even FY23 was a record year for cost savings, and we want to continue that momentum going into FY24. Now, this is like whether it is material cost or overhead or manpower, whichever cost it is, we are looking at it in a very different way and trying to attack that cost. So both of these factors would help us kind of grow our margins as well in FY24.
Okay, so you have said that margins will be in double digits, but can you give us a margin band for FY24?
Yeah, I don't have a particular number, right now, but I can say that we would definitely like to stay in double digits as the whole year progresses. So that is going to be our attempt.
Mr. Agarwal, where do you see the big trigger coming in from? From medium and heavy commercial vehicles or light commercial vehicles? Will it be the defense space? Where will this big trigger come from?
I think right now we are looking at growth in every segment that Ashok Leyland operates in. Like I said, a recent CRISIL report suggests that MHCV truck industry would grow by about 10 to 12%. And we have a similar view on the market. On the bus side, I think the CRISIL report says that the industry may grow by 25 to 30% in that range, right? And we also believe because bus is coming out of, post-COVID period, bus is coming out of a low base, and therefore that kind of a growth is feasible. Overall, we think the CV industry should be 10% positive as compared to FY23. And that is what our view on the industry is right now.
Got that. But is there any scope for price appreciation now? Also, how is the discounting situation playing out currently?
One thing I can say is that I think even if you are reading all the press reports and the statements, one thing I can say is that industry has a realization that it cannot stay at the current EBITDA levels. And the simple reason for that is that the industry has to invest in the future. And the future is going to be very, very different. We are talking about new technologies. We are talking about alternative fuels. Now, while the timing of all these is still under debate, but I think it is very, very evident that this change will come sooner than later. And therefore, industry has to invest in the newer technologies and be ready ahead of the time. So given that situation, I think there is a general tendency in the industry to look at profitable growth. Of course, Ashok Leyland's mantra is profitable growth. We don't want to get into any discounting game, etc. And therefore, like last year, we will continue our efforts for better price realization, for more cost savings. And if the industry goes well, then of course, we will have a good year in FY24 as well.
Just one final question then. Can you lay out your Capex plan, and would you be looking to raise capacity anytime soon?
So capacity, on the capacity side, we think we have enough capacity even for the next 2 to 3 years. So on capacity side, we are not worried. There would be small Capex investments into capacity, but that is largely for augmentation of capacity or debottlenecking of capacity in certain areas. Most of the Capex would be on the product development side only. And in any case, last couple of years, more of the Capex is being focused on the alternative fuels and new technologies, and that is going to be the trend for next few years as well. Overall, we spend about 500 to 600 crores in Capex, and even in FY24, we think that we'll be spending roughly around 600 to 750 crores in Capex.
All right, Mr. Agarwal, good speaking to you. Thanks so much for joining in. So you're looking at outgrowing the industry. The buses segment will grow at a faster clip. The margins you're hoping stays in those double digits with various levers like cost saving that you've been focusing on. Well, that's about Ashok Leyland, but let's move on. And Manisha Gupta joins us to run us through all the action she's picking up from the commodity markets overnight. Morning, Manisha.
Morning, Nigel. Thank you for that. I'll start with the crude oil prices, where we are trading at a 3-week highs right now, and we have seen gains for the 4th trading session. We're trading above $76 a barrel for the Brent crude prices. And this